Bitcoin has just had a fantastic weekly candle close, and in today's video we're going to be discussing absolutely everything you need to know about why this weekly close is so significant, as well as going over some key historical patterns for Bitcoin, the short-term price action, and so much more. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic start to your week. In today's video, we are taking a look at the implications of the current weekly candle close, discussing the macro charts and referring to historical price structures, as well as going over the current short-term price action and immediate expectations. By the end of the video today, you will not only have a detailed understanding of what is happening with the price action, the significance of the weekly candle close, but of course, what to expect next. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, take a few seconds, go down to the pinned comment, click the first link to join the Telegram channel. We post daily updates with everything you need. We post charts, we post analysis, we post videos, educational posts, news events, everything you need really to stay in the loop of cryptocurrency with Bitcoin and that relevant economic news. If you are interested in taking your trading to that next level, join us on VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll get access to our group chats as well, our general chat, our trading chart and education chat, our news, our help, our daily video, and our trade setup chat. If that is what you're interested in, go ahead and contact me via the pinned comment of the free channel by clicking my name or these links for more info. Without further ado, guys, let's dive on in to the video. Starting on that market data, how are we looking? 24-hour volume down 51%. Actually quite surprising that volume is down 51%. We're sitting at 70 billion in total. 24-hour liquidations taking a nosedive of 65%, sitting at a very small amount of 57 million. Of the 57 million in liquidations, 40 million have come from long positions and 16 million have come from short positions. So taking an overall look at that volume in liquidation, we aren't really expecting too much price action to occur over the past 24 hours. Taking a look at the 24-hour price action, we can still see Bitcoin is chopping around about that prior area of resistance, which we have now actually flipped into a support. So we can see Bitcoin has come up, we created that new high, we deviated under upon the Trump speech, of course. We saw a whole bunch of liquidations and liquidity occur, and we have managed to hold onto that POC level, sitting around 67,000, but most importantly, holding onto that 67,300 to 67,600 support range, turning this into a local short-term support, which could facilitate a continuation higher. We'll be discussing this and more in just a moment. Moving over to the DXY, and of course, we do have some major economic news coming up. Primarily, we do have the Federal Reserve interest rate news, and that is going to be in about 3 days' time. Pay very close attention to this event. These events always have significant impact on the price action, and if they don't have significant impact on the immediate price action, they do influence the overall narrative of the risk asset markets, and thus can have high time frame impacts on the directions or directional expectations these risk assets do move in. So we have to pay very close attention to that. We'll be discussing that more in just a few videos. Moving over to the DXY, we can see the DXY is still pushing sideways. Again, we are really not expecting much here for the DXY until we get that Federal Reserve interest rate data coming out. All we can say for sure over here is right now we are still in a downtrend. While we remain below this trend line, we are expecting corrections. If we do want to see a correction on the short term develop, we would want to see a drop back below that change of character level to see a correction into about 103 level. If we're able to break back above the 50 EMA, we would likely see a rally back up to likely retest at 105 to 106 region. Again, the interest rate data will play a massive role in determining where the DXY does move to. The S&P 500, not all that much changing here on the weekly. Of course, with that new weekly candle open, we can see it has been slightly green. overall, the macro expectations are still very much upwards at S&P 500. We are still looking for 6,000. We have been looking for 6,000 ever since we broke out of 4,700. We have been saying, guys, and we will continue to say, provided the high time frame structural integrity of the trend remains intact, the expectations are still higher. What does that mean? If we look at the overall uptrend we have been in, ever since we broke these resistance levels, these low resistance levels, we have been creating these highs and we've been creating these lows, these higher lows in price action. Most importantly, these prior higher lows that we do establish never ever break back down. And additionally, these prior highs that we establish as well never break back down. We can see we came up, we retested above it, we continued. We came up, we retested above that high, we continued. So we're looking for retests above these higher prior high points for continuations. That tells us if we were ever to break below one of these prior highs, particularly we're looking at 5,300 over here, that would be a dent in the armor or a structural break in the overall integrity of the trend, and thus could indicate we are moving into a high time frame downtrend. Until that happens, we are expecting macro continuations higher. That is it for the S&P 500. Let's get into Bitcoin. Take a few seconds, head down to the pinned comment, click the links to sign up to BitGet, BitUnix, or BingX for 15% off your trading fees and $5,000 in bonus rewards. Again, doing that takes a few seconds and can save you thousands of dollars over the course of your trading career. You can check them out in just a moment when we play the little ad. Check it out and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump into Bitcoin, and in 9 minutes time, we have got our weekly candle close. We are trying to time this video perfectly so we can discuss the weekly candle close as it is happening. So let's jump over to that weekly chart momentarily and show you guys. At 8 minutes and 55 seconds, we have got that major weekly close, and the reason this weekly close is so significant, as we discussed in the prior video, is not because of where the price action is. If we look structurally again, we aren't breaking prior highs. In fact, we're still under these prior high levels, the body and of course the high of the wick, but the significance really comes from two things. From a structural high time frame perspective, we have been able to break and remain back above that $60,000 level. So that is going to be number one. That is a fantastic thing. Okay. And number two, the other point of major significance is that we have broken, or we are attempting to break out, and we're almost guaranteed to break. I've got 8 minutes remaining unless we see a crash over here, that RSI on the weekly. So let's discuss that, guys, and then we'll jump into the short term. What we can see here is that the weekly RSI is breaking its downtrend. This downtrend in momentum has spanned a significant amount of time. We're looking at around 120 days. That is like 3 to 4 months over here, a massive time period for a downtrend on the RSI. So this is a representation that momentum has been falling during the period of which the price action has been within this consolidation pattern. This is a representation of weakness, okay? When we have weakness, we are more likely to see downtrends continue. However, what we are seeing here on the weekly, and exactly what we saw a few days ago on the daily chart, if we go ahead and adjust that trend line for the daily chart, we can see on the daily we saw the RSI breakup. That resulted in a direct continuation of around 15 to 20% in the price action, attempting to go ahead and retest the range high. Now what we are seeing on the weekly is we're seeing that positive momentum, which has been developing on the shorter time frame, spill over to the higher time frame charts, and we are seeing that positive momentum shift on the weekly chart. A breakout over here increases the likelihood that we are going to not only retest the downtrend of the descending channel, but we are going to break through it. this is fantastic news. Now, this doesn't tell us how high Bitcoin is going to go. This simply infers the probability of a break of this trend line. So what it is telling us, there's a greater probability that we break upwards here than we reject while the momentum is positive. We'll talk about expectations in terms of price in just a moment. That is point number one. That is the major significance of the weekly candle. We can see that closing in 6 minutes time, and we'll take another look at it when it actually does close. Let's move over to the daily chart, and then we'll jump into the macros again, and then to the short term as that weekly candle is closing. What we can see here on that daily chart is we have a very, very clear descending channel formation. This descending channel formation has been validated by our lows. We do have some liquidity grabs below these levels. Again, we validated those levels with that VRPV entering that low historical resistance range over here, mostly filling that gap with a couple of these liquidity wicks over here. We can also see, guys, with this channel formation, we have got our 3 major points. We've got our range low, our range high, and our mid levels. We can see on our mid levels, these mid levels have provided major areas of structural support, as well as acted as major trigger points for directional shifts in the price action. As we said prior to the break of 63,000, all the way when we were down at 58, we told you guys that a break of 63, as we have seen in the past, would likely result in a strong continuation to the range high, which we are currently seeing. So this level acts as a key trigger point for directional shifts within the channel. If we're looking at the channel itself from a purely structural perspective, taking a measured move from the range high to the range low and applying that to the perceived breakout point, that could take us well into the $80,000 region as an expected breakout target. From a horizontal perspective, we are wanting to see breakouts of these prior high points at around 71.9 to 72,000 to again validate that we have broken from a horizontal perspective and we are clearing some of these highs for continuations. Overall, it is looking fantastic. We'll talk about in a moment what the bears will need to do to actually invalidate the possibility of this breakout. And again, what the bulls will need to do to validate that possibility of the breakout. Remember, the weekly RSI only goes to increase the probability of a breakout. It does not validate the breakout itself. When we are looking to validate the breakout, we need to see strength, structure, and trend. We need all 3 or at least 2 of the 3 to have a higher confidence in the potential breakout. So when we're looking at this, we look at strength, okay? The weekly RSI breakout, positive momentum. Momentum is a representation of strength. We look for structure. We are in a descending channel formation. This is the structure of the price action. What does a descending channel formation represent? It is a bullish continuation pattern, okay? It is accumulation, okay? That is what it is. And if we look at trend, well, we have our overall downtrend, which is represented by the upper level of the channel, which is our downtrending diagonal resistance, which we would need to break above. So only when we have at least 2 out of the 3, or at least 3 of the 3, we have a high confidence breakout of the channel, which we would then expect that directional continuation to develop from. That is going to be it, guys. Let's move over to the macro charts. And there's one very, very interesting historical pattern I wanted to show you, which has been developing on the weekly chart. And this is going to be the Ichimoku Cloud baseline indicator, the baseline indicator. Now, the baseline indicator, as you know, has been a fantastic tool, and a tool that we've used. Man, we've used the baseline Ichimoku Cloud indicator so many times on the channel, dating back to, you know, we're looking at when the channel was first made back in 2020. I don't even know when I made it, 2021 or 2022, I can't remember. But we've used the baseline of Ichimoku Cloud indicator to primarily predict the exact bottoms of the bear markets. And how do we do that? Well, to show you very quickly, a very simple method we found and we've been using, and we've used in prior cycles, is we simply wait for the baseline of the Ichimoku Cloud to close a weekly candle underneath the leading span B, and that has always marked the exact 2-week bottom for Bitcoin. You can see it marked the bottom over here, and it marked the exact bottom over here. So the baseline is a fantastic tool for Bitcoin to represent or to determine not only bottoms and tops, but also points of which the price action is really starting to reverse in. So we expand that now to our weekly chart. What we can see with particular similarity to the 2017 cycle is we saw during that macro uptrend, we saw numerous retests, not so much in the 2020 cycle. The 2020 cycle was a lot more volatile and a lot faster than the 2017 cycle. It really kicked off and ended a lot quicker. And again, we had a massive influx of money coming into the markets, a lot of attention, a lot of stimulus money really pushed that 2020 cycle up so aggressively and so fast, which is why we had that kind of double peak cycle, that double top cycle, which we didn't see in prior cycles, and we don't traditionally see in these macro uptrends. But what we saw in 2017 was where we kind of gradually moved along that baseline of the Ichimoku cloud, retested it numerous times as that uptrend continued. We saw significant drawdowns. Remember, these drawdowns, 30%. Some of these drawdowns, 40%. We saw some big drawdowns along that baseline, but while we remained above the baseline, inevitably the price action continued to rise. We only saw that trend really come to an end once we saw an official breakdown of that baseline. That is when we really entered into that bear market. So we're looking at the current cycle. We are seeing some similarities over here. We can see we have been sitting mostly above that Ichimoku cloud baseline since we broke out of the baseline all the way back in October 2023, which was really the start of the bull run, right? The bull run started October 2023 when we broke through that $30,000 resistance, which is going to be the low resistance right over here of that prior cycle high. That is when we really entered that bull market. We're sitting above the baseline of the Ichimoku cloud the entire time, having completed now our first retest. Going off historical patterns, this would suggest Bitcoin does still have some macro upward trajectory possibility, provided the baseline is able to sustain. So although we have seen these corrections, it is unwise to assume these corrections will lead to 40,000, 45,000, 30,000 until we start to see these structural or these technical levels suggest that we actually have this macro weakness developing. Moving over to another chart we can take a look at is the 3-day chart. 3-day chart, fantastic chart, particularly the Gaussian channel. We can see again the Gaussian channel in the 2017 cycle, we remained above the green channel the entire time. We dipped into it a few times over here, nothing of major concern, but it's only when we really came and dropped below that channel the first time is we really printed that top and ended up seeing that macro correction. The same thing, guys, we are looking for in this cycle. When we break below that channel, that is when we are looking for that macro correction. Another thing we can do is take a look at the leading span B. Now, this is a leading indicator. It is slightly more leading than the Gaussian channel, hence the name leading span B. The leading span B is simply this red line of the Ichimoku cloud. What we have noticed is when we break below the red line of the Ichimoku cloud, this level over here, it's kind of like a pinky line actually, we see macro corrections spanning anywhere between 15 to 71%. Historically, we have always seen a macro correction when we break below this level. This isn't like, oh, see it a few times. No, every single time we break below this level, we have seen at least a 15 to 71% correction every single time in the 14 years of Bitcoin's history. So if you want to be confident that we're going to see macro corrections downwards, that is about the highest confidence breakdown you could be expecting to see for that correction downwards. So I do not expect to see a macro correction under 56,000, okay, 55,000 the level is, unless we do break below the level. And a break below level, well, that would basically mark the end of this uptrend for the first time since we entered the uptrend all the way back in January 2023. Moving over to the short-term price action, and actually by now the weekly candle has closed. Fantastic news, good news, weekly candle close. Great weekly candle close, of course. Let's talk about the weekly and the short-term price action. Short-term price action, not much has actually really changed from yesterday's video. We are still hanging around this same region, and I guess I'll go back to what the point I made in last video once again. Knowing that $63,000 was the level of significance, and if you don't remember why, let's quickly go over it. The $63,000 level is going to be the leading span A, the top of the green cloud, okay, as well as the mid-level of the channel. That is a $63,000 level. We talked about why that's important, and we talked about what happens if we break below that level. So we know that the $63,000 level is now also represented by the horizontal level right over here. So we can say that while we remain above 63,000, the expectation is that we go into the $70,000 region and retest the downtrend and potentially break over the downtrend now that we've had the weekly positive shift. So what happens on the short term, whether we'll see more chop, a little bit of downwards, a little bit of upwards, is very much irrelevant, provided we remain above the key structural level, which is facilitating, or which could facilitate, that macro continuation upwards. It is only the breakdown of the support level only at the breakdown of that support level would we see the probabilities for a range high retest decrease, okay? It is only at that level. So what happens in the short term, you should not be too worried about. You should not be too stressed about. Of course, if you're scalp trading it, that is fine. But if you're looking at this price action, you see a small little correction and you start panicking, you need to start to zoom out a little bit and really look at the high time frame structural levels. Provided structural levels don't break, the directional expectations of the price action don't change. It is simple. Provided structural levels don't break, directional expectations of price action do not change. And again, that changes based on the time frame you're viewing. And in this instance, we're on a higher time frame, so we're looking at the high time frame structural levels. Now, for argument's sake, let's talk about the immediate price action. Immediate price action, guys, for us to see continuations higher here, we can see very clearly on the VRPV, we have a very low historical resistance range pushing above that prior high. So if we want to see a strong, volatile, bullish move, we want to see a break over 69.3K. Awesome. If we want to see a bearish continuation, we want to see a loss of 66.6K. Range low, very much, again, range low, okay? Oh, I put H there, it's meant to be an L, and range high. Break up, continue up, break down, continue down. Between, this is going to be a chop range, meaning taking positions in the middle of the range is unwise. Looking for entries on longs of the range low or shorts of the range high, depending on what the strength is suggesting, could be slightly wiser. If we do see a breakdown, we are looking for these pockets on the VRPV, these pockets over here, to find potential support. 66,000 psychological level, looking at that prior high of 66,000. And of course, the 65.5, our change of character, and of course, our 65 psychological level. These are the points we are looking for support if we see breakdowns. You will note that neither of these support levels will result in breaks of 63,000. If we break upwards, well, we are very clearly looking for our psychological 70, our 71, and our 72 breakout on the descending channel formation. That is it for today's video, guys. Have a fantastic day. Tomorrow, we're going to be talking about Bitcoin dominance, as that is rising, something to talk about. And of course, the altcoin market cap, as with Bitcoin dominance rising, we could see a little bit of problem for altcoins and the total as well. Thanks for tuning in. Catch you guys in the next video. Have a fantastic day. See you then.